Welcome to the Snowbirds Expat Radio Podcast, powered by the Snowbird US Day Tracker app. I'm your host, Gerry Scott, and my goal is to give you answers to your cross-border questions, to ease the stress of a cross-border move or extended trip, and to keep you up to date on all you need to know with cross-border rules and regulations. Now let's get on with the show. Welcome to the Snowbirds Expat Podcast. I'm your host, Gerry Scott. On today's episode, we're thrilled to have Aaron Dawes from Smythe CPA. Aaron is a seasoned expert in navigating the complex world of cross-border tax matters, and he's here to shed light on a very important topic, and that is U.S. individuals inheriting assets from Canadian parents. Now, before we went online, Aaron and I were discussing that this is becoming very, very common. So I think the timing of this and making time available from Aaron, and to get that word out there. We've got 10 great questions for you, Aaron. So tell us, before we get into these questions, tell us more about Smythe CPA and where your offices are located.
Sure. Well, first of all, thanks very much for having me. Really looking forward to our chat today. So Smythe LLP, we're based out of British Columbia. We have 3 offices. So we have an office downtown Vancouver, one in the Fraser Valley in Langley, and then also a third office on the island in Nanaimo. And our firm really focuses on owner-operated private company businesses and the owners and shareholders.
Interesting. Well, I know you and I've had a chance to meet a few times, and most recently we had a chance to share a pizza in Vancouver. We're located in Coquitlam. But we were talking to the producer, Toronto Mike. He said it was minus 27 in Toronto. Who cares? Sorry, Mike. And of course, Vancouver's not too bad, but of course, we're loving our weather over here in Maui today. So we appreciate everybody's time. So here we are. Let's jump right into it.
Sure.
So once again, Americans inheriting U.S. Canadian assets from their parents.
Yep.
So the first question I have for you, Aaron, is: are U.S. individuals required to pay U.S. federal tax when inheriting assets from Canadian parents?
Well, not on the inheritance itself, but on future income that's produced by those assets. So let's say that the American beneficiaries inherit a non-registered brokerage account from their parents, and that brokerage account pays dividends, or there's some dispositions and there's capital gains. Once the account transfers over to the American beneficiary, it's now their account, and they would have a requirement to report that income on a U.S. tax return.
Okay, and here's one of the questions that I didn't actually have on here, but this did come up.
Okay.
Is a person inherits that brokerage account? The American inherits it from their parents. What happens if there's Canadian mutual funds in those accounts? Do they have to report? Is there a PFIC requirement they have to manage?
Unfortunately, there is. So the PFIC reporting rules extend to estates. So if a U.S. beneficiary inherits a non-registered Canadian registered account or non-registered Canadian account, then they would have to file Form 8621, which is the PFIC reporting form for each of those Canadian mutual funds, Canadian ETFs. Any mutual funds, ETFs that are in a registered account, like an RRSP or a RIF, would be exempt from those rules. Unfortunately, a TFSA would still be subject to the PFIC reporting rules.
Okay, and that was kind of a great segue to my next question here is, what are some of the U.S. tax implications on inheriting different types of Canadian assets, such as real estate, non-registered accounts, which we discussed, or RRSPs?
Yep.
And the real estate is the big, they're all important. So yeah, go ahead.
I would say they're all important. So really, it's going to be the U.S. disclosure forms. And these forms from a U.S. perspective are all very important because generally they have a penalty starting at $10,000 for non-compliance. So let's give you a few examples. There's a U.S. reporting form called Form 3520, and that's where you receive a gift or an inheritance from a foreign estate. And if that inheritance exceeds more than 100,000 USD in a calendar year, there's a reporting obligation. That penalty is actually 25% of the amount received. So if somebody were to just receive a $100,000 inheritance, or they don't file the form or they file it late, potentially there could be a $25,000 penalty. So it's extremely important. There's a form called an SBAR from a U.S. perspective, and that's where a U.S. person reports their non-U.S., in this case, Canadian financial accounts. So once the beneficiary inherits those accounts, or even if they say are executor and have signing authority over those accounts, they would have a U.S. FBAR reporting requirements, Form 8938 reporting requirements. Again, pretty steep penalties. So it's really important that those forms are filed. And I would stress with any cross-border estate issues, it's really important to find a cross-border practitioner like myself, who's kind of well-versed on both sides of the border.
It's interesting to talk about the FBAR report, because I would think that there's probably about a 2-year period from the time that mom and dad pass away, you inherit these assets. By the time the estate is settled, I guess you only report when the assets are in your name. So maybe it's only a 1-year reporting on the FBAR for the average American.
So I would say it depends. So what we see in practice is often, this U.S. beneficiary potentially could be the executor as well. This could be, a U.S. child. And often what we'll see is, parents are getting older and may name the U.S. child as co-signer on their account. So once that U.S. person has signing authority, then there's an FBAR requirement. If signing authority isn't applicable, then you're correct. It would be down the road, once they have access to those funds.
Now that FBAR report, do you find that the American person in this situation would be intimidated by maybe filing it for the very first time?
I think so. I think often when individuals haven't prepared an FBAR before, they just read online and they hear about penalties and they hear about the IRS assessing these penalties, and quite often they are quite intimidated. From our perspective, we were filing FBARs for 700 different clients throughout the year. It's a very common disclosure form in the cross-border world.
Okay. Question number 3. What Canadian taxes, if any, will be triggered upon the inheritance of assets by that U.S. beneficiary?
What Canadian taxes? Well, I guess it depends on the asset inherited. One example would be if, going back to the non-registered brokerage account, if the U.S. beneficiary inherited a brokerage account, let's say that brokerage account had shares in RBC or TD, so a Canadian company, paying out dividends, there would be withholding tax at source. So whenever a Canadian non-resident receives Canadian dividends, there's a 15% withholding tax under the treaty. There could be withholding taxes on the sale of real estate. So if real estate passes on to a beneficiary, a U.S. beneficiary, and that U.S. beneficiary later sells Canadian real estate as a non-resident, there could be withholding taxes there as well. There most likely wouldn't be a requirement to file a Canadian tax return. It really depends on the asset. More likely would be a withholding requirements.
This next question we have, and I'll ask your opinion.
Mm-hmm.
We know that if your beneficiaries have the ability to inherit your IRA, and then they have that 10-year window where they can withdraw the money out and do some great tax planning. Have you ever heard on the Canadian side that we might do something similar to a RIF when mom and dad pass away and we receive those assets? Have you ever heard that a discussion could make it a little bit more fairer for individuals receiving those assets?
No, that's a very good question, but I haven't. So, unless the RIF's transferring over to the spouse, there's a lump sum payment. So if the RIF transfers to a beneficiary as a child, there will just be a lump sum. There's not the same ability as in the U.S. where you can pull that IRA out over that 10-year period that you mentioned.
So question number 4 is really is being asked around RRSPs, LIF accounts. Those assets would just be liquidated. The estate would be responsible for paying the tax, and the individuals would just receive the assets, correct?
Correct. Yes.
Okay, that makes a lot of sense.
Sometimes what we'll see is, parents a little bit older and they have a RIF, and the income that's earned by the estate, if it's going out to a non-resident beneficiary, there could be withholding tax on that payment of income.
I have lots of friends south of the border, have lots of friends north of the border. We have clients on both sides ourselves. And it seems like the Americans don't appreciate how creative or how friendly their tax system is compared to the Canadian system. Do you want to add something to that?
I would just say there's more deductions in the U.S. than there are in Canada. Obviously, much lower tax rates. What we find is a lot of clients moving up from the U.S. to Canada and just being surprised with how much higher their overall tax rate is, and maybe surprised by us not having things like the itemized deduction that occurs in the U.S. Or another big benefit in the U.S. is married couples file jointly, so they benefit from lower tax rates. And often there's some confusion or some surprise upon moving to Canada and realizing that each spouse has to file a separate tax return. So those are certainly different nuances, and I would say more lower tax rates and more optimization for deductions from a U.S. perspective.
Before I get into question number 5, do you find, we know that we're busy on the wealth management side. You guys are very busy yourself. Are you find that there's more, is it just Canadians coming home? Is it green card who married the American spouse that are moving up to Canada here? Like, what is the major trend that you guys are seeing on your side?
So what I typically see is individuals kind of still in the working age are generally moving from Canada down to the U.S. Just more employment opportunities. And then, as you mentioned, we're seeing repatriations. So a lot of Canadians who have spent their entire working lives down in the U.S. Deciding to retire, maybe retire early, moving up to Canada. A lot of situations where maybe they had married a U.S. person's spouse, so they're coming back and helping that U.S. spouse obtain the PR in Canada. So usually moving down to the U.S. earlier in the careers, and then towards retirement, we're seeing more people move from the U.S. up to Canada.
So there's nothing ever political. You don't really see a lot of the noise out there. I'm moving north.
So we do. So what's very common for us is we'll cold call from someone in the U.S. looking to move to Canada, and I'll walk them through the differences, nuances between the two countries. And one thing I always recommend is, hey, let us review your prior year's tax return, get a sense of your income and your assets, and let us prepare a tax projection to show you what your taxes would look like as a Canadian resident. And especially if they're coming from a non-tax state like a Nevada or Texas, there's usually a pretty significant delta. And a lot of times once that projection's done, we don't hear from that individual again. And my assumption is they stay down in the US.
Yeah, no, it's very interesting because, and you also see some people kind of straddling. This is what I'm coming across. This is the most confusing. People are straddling the border. They're living here, they're living south, they're living north. Do you see a lot of that where they just come to you and say, how can I be compliant?
We're seeing more post-COVID. So from clients in working age, more remote work opportunities. We're seeing, historically we saw the Snowbirds like yourself who are Canadians but spending significant time in the U.S. Now we're seeing the opposite. So we're seeing a lot of U.S. individuals who spend 5-6 months a year, say in Whistler or somewhere up north. So we are seeing more of that, 50-50 type of routine. A lot more complex residency planning, making sure that people aren't falling into the traps of accidentally becoming a resident in one country where that really wasn't their intention.
Oh, I'll tell you, it's interesting. When we get that question, we're never going to come across as accountants, or an immigration officer, but it sure helps to have people like yourself that we can refer them to. Because right away, these people get scared. They have no idea, how offside they are. Okay, so question number 5. How does the Canadian-U.S. tax treaty help mitigate the risk of double taxation for U.S. beneficiaries?
Yeah, so I think the point to understand there is if the U.S. beneficiaries are in a situation where, there's that withholding tax I mentioned, so maybe they're receiving Canadian dividends from a brokerage account. Under the treaty, they can claim a foreign tax credit on their U.S. federal tax return for any withholding taxes paid to Canada, as well as any actual taxes paid to Canada if applicable. Think Canadian rental income. The nuance to be careful of here is not all states follow the treaty. So there are some states, and the most prolific one is California. California does not follow the treaty. So if the U.S. beneficiaries living in California, really there's a double tax. They're paying the Canadian rate plus the additional 10 to 13% to California.
Now, along that note,
Hmm?
do you as individuals need to file additional forms to claim these tax credits for taxes paid to Canada on inherited assets?
You do. So it's part of the U.S. personal tax filing requirement, where the income would be allocated as foreign on the U.S. return. There's a specific form called the 1116 foreign tax credit form, where a taxpayer or their accountant would claim a credit for any Canadian taxes paid.
Okay. So along the same question, it says, question number 6 is, do the U.S., what are the responsibilities of U.S. beneficiaries when inheriting assets from a Canadian estate?
Generally reporting responsibilities. So as I mentioned earlier, the 3520 is a big one where they're inheriting more than $100,000 USD in the calendar year. The FBAR, the Form 8938 that I mentioned. If they've inherited, say, Canadian real estate and that's being rented, well, now they fall under the Canadian non-resident rental rules. There's withholding obligations. There's annual filing requirements. Could be filings on both sides of the border. So the advice I would give is, you need to contact a cross-border tax professional.
Okay, this is going to be these questions are now more towards the Canadian parents and how they can prepare themselves for different issues. So, what steps can Canadian parents take to minimize cross-border tax burdens for their U.S. beneficiaries?
Yeah, that's a very good question. It is a challenging one to answer because nobody knows when they're going to pass away. The one area that gets very, very messy, and you alluded to it earlier, was the PFICs. So if the Canadian parents have mutual funds or Canadian ETFs in their non-registered accounts, once the U.S. beneficiary inherits those accounts, now they have a PFIC obligation in the U.S., which gets quite messy. I would say most of our clients aren't that concerned. Well, they're living. They're concerned with producing as much investment income and investing the way that they like. So it's usually not a consideration that's being taken into account. But nonetheless, that PFIC issue does exist.
Now, what we found is, a lot of times when we have, people are finding us either through the podcast or through some of the great blogs that one of our colleagues, Carson Hamill's been writing. How common do you think it is, or how important it is for these parents, Canadian parents, having a corporate trustee because all the kids have moved south as executors to their estate?
Yeah, it can save some additional filing from a U.S. perspective. So there is value there. We usually see the opposite. So from the opposite side, where it's U.S. parents and then living in the U.S. and us not wanting the U.S. parents to have a Canadian resident executor and pulling that estate into Canada. So less so from a U.S. perspective, more so from a Canadian estate.
Okay, so let's just quickly spend a couple minutes flipping this, and these are Canadian children inheriting assets from the mom and dad who are U.S. taxpayers. Is there a huge difference? Is it easier, or is it?
I would say it's probably more complex. So I think in your example here, this is U.S. parents and their beneficiaries or children are in Canada. So what we normally recommend is if there's multiple children and there's children straddling both sides of the border, to have the executor be in the same country as the parents. So have a U.S. executor. And the reason being, as I mentioned earlier, is if your executor is a Canadian resident, now once the parents pass away, this can become a deemed resident estate. And now the estate has to have filing obligations in Canada. There may not necessarily be any additional tax. It really depends on the circumstances, but there's additional filings nonetheless, compliance no penalties for missing forms. So it creates more burden for the executor, and when they're obviously dealing with a very difficult time in their lives.
Well, what we'll do is we'll set up another podcast, because I guess the big thing that we're struggling with right now is that it's very common for the parents to use, the U.S. parents to use irrevocable trusts, that set up these trusts, and then they name their Canadian children as beneficiaries, trustees on that irrevocable trust. And then, of course, there's kids living up here in Canada. We find out that, wait a second, you've got this Canadian as a trustee. Now it becomes a Canadian trust.
Exactly. Yep.
That's the biggest thing. So I think what we'll do is we'll dig into it, because it's very, very complex. And that's something you guys are dealing with as well. Is that true?
We are. We see a lot of that. So it's very common in certain states, Hawaii, California, and these revocable trusts are generally set up for probate purposes. So we can talk about it next time, but principal residences and investment accounts are set up or transferred into these trusts. And once the trustee is a Canadian resident, it just creates additional complexities in Canada.
Because it really, what we're finding is that trust now has to be managed in Canada. The assets have to be in Canada. And a lot of times the banks don't want to touch them whatsoever, which is okay. The banks don't want to touch them.
Yeah, and there's different tax treatments. So a revocable trust in the U.S. is flow through. Meaning,
Yes.
If there's investment income that flows through and is taxed on the parent's personal return, from a Canadian perspective, it's a separate entity.
Yes.
Now there's a mismatch. There's complexities, and it does get quite messy. And a lot of times people don't realize it until many years later, because again, from a U.S. perspective, a revocable trust will flow through, and there's no difference for tax purposes.
Yeah, exactly. No, that's the biggest thing. Well, I'll tell you what, Aaron, I really appreciate your time today, and thank you very much. And like I say, we will we'll flip it. Canadian kids inheriting mom and dad's assets from the States. But thank you very much. I appreciate your time.
Yeah, thanks for having me. I really appreciate it.
And we can't, there's a lot of political stuff going on both sides of the border these days. So I got a quick reminder to all our friends north and south of the border, be patient, be kind. These are difficult times. So we wish you well, and we look forward to seeing you back in Vancouver. When we're in Vancouver, we look forward to splitting another pizza. So thanks again.
Thank you.
Thank you again for listening to the Snowbird Expat Radio Podcast. The best way you can support the podcast is to forward the episode to a friend, and please don't hesitate to like, subscribe, or leave a comment. Now, before you go, let me leave you with one of my favorite quotes. Be kind to all, the world is small.